to be successful in the lab to market journey is not just about making sure the technology works. It's about all the other things: raising money, hiring people, managing a board, bringing on advisors, working with difficult customers, getting purchase orders, firing people that may not be a great fit. All of those things are people related. And yes, it's based on the technology that I'm bringing, but ultimately, it's more than just the technology itself.
Welcome to the Lab to Market Leadership Podcast. Too many advanced science and engineering companies fail to deliver their innovations from the lab to the market. We are on a mission to change that. My name is Chris Reichhelm, and I'm the founder and CEO of DeepTech Leaders. Each week, we speak with some of the world's leading entrepreneurs, investors, corporates, and policymakers about what it takes to succeed on the lab to market journey. Join us. For those of you in the world of semiconductors, particularly if you're an entrepreneur or a CEO looking to fundraise for your semiconductor or semiconductor materials company, or if you're in that domain, you need to listen to this week's podcast. I am talking to Mr. DeepTech himself, Kevin Chen. Now, Kevin is the managing director of Lam Capital. Lam Capital is the corporate venture capital unit for Lam Research. Lam Research being the $100 billion market cap semiconductor materials and manufacturing equipment company. And Kevin looks after their investments. He's responsible for making strategic investments in young, promising startup companies within the semiconductor and materials domain. And I'm super interested to speak to Kevin because not only is he a great investor, he has got the most incredible background. And I call him Mr. Deep Tech because this guy, he ticks all the boxes. He's got the PhD from MIT. He's been a founder or a co-founder of at least a couple of startups within the photonics, hardware, semiconductors value chains. He's been an executive at Applied Materials. He's been a CEO. He's actually jumped domain and been a CEO of an agri-tech startup as well. And now, of course, he's an investor. And so I want to understand from Kevin how he manages to take all of this great experience he's gathered and apply that to making better investment decisions on behalf of Lam Capital. I also want to talk with him about the advice that he has for entrepreneurs and executives looking to fundraise. Fundraising is pretty tough right now. And I'd love to hear Kevin's view on the things that he's looking for when it comes to raising. I'd also like to get his insight into boards and board performance. If there's one thing I've heard again and again, it's the mixed quality of boards of directors and their general performance. How can we get boards to perform better? Kevin has sat as the CEO and founder of these. He's been a non-executive on these, which he is today. He's an investor on a number of boards. What is his view on improving board performance? This is going to be a really interesting conversation. Let's see where it goes. I hope you enjoy it. Let's get into it. Kevin Chen, thank you so much for joining me.
Thanks, Chris. Great to be here.
You are Mr. Deep Tech. If anyone looks at your profile and they see the PhD from MIT, they see the early background in semiconductors with groups like Intel, the background to startups in the photonics space and the advanced materials space, the experience with Applied Materials, and then the change over to ag chem as well, to ag tech, and now with Lam Capital, Lam Research, back with materials and semiconductors. So, the journey that you've been on from startup to corporate to investor, all within these deep tech sectors is quite unique for an individual. Do you find you naturally gravitate towards one area more than the others?
I think the underlying theme for me has been being around new technologies. That's probably the most basic common denominator over all of those, and then a curiosity to learn about different technical areas. Again, looking back, I realize now that really, I think my career DNA or my interest in technology really started at a very early point where I just like understanding different aspects of technology.
Is that true today? Is that still the hook?
That is still the hook today. Yes. And so if I fast forward to what I'm doing now, which is that I lead the CVC, Corporate Venture Capital Group of Lam Research, a very large semiconductor equipment company, we have the wonderful opportunity to talk to deep tech entrepreneurs across the spectrum. And for me personally, it's a wonderful match of my interest in various technologies, and now some years later, having all the operational and entrepreneurial background that I've gained through my career, being able to offer that to our entrepreneurs as well. So it's the ultimate combination of personal interest and also professional experience. So it's wonderful.
Fantastic. Tell us a little bit about Lam Research's focus from a corporate venture perspective.
Yes. So Lam Research as a company is we provide manufacturing solutions for chip makers. We provide the machines and the processes that chip makers need in order to produce the devices that we all use today. So from a CVC perspective, we are looking for companies that can further the roadmap of the chip industry and can enhance some of the things that we're looking to do within Lam Research. So some of the areas we look at include photonics, which I alluded to earlier. There's some now a trend to integrating optical functions with semiconducting or electrical functions. We're looking at, of course, the chip industry itself, whether it be new memory technologies or new artificial intelligence, computational technologies, and then things along the semiconductor value chain, starting from the incoming materials, the substrates, through to the manufacturing of chips, through to the back-end processing of chips, the packaging of them into multi-chip packages, for example, and then the use cases of new chips. So we cover that whole spectrum. And I would say we also look at adjacent areas, which include robotics. There's a lot of automation that's happening not only in the chip industry, but in adjacent industries. We look at automation technologies. We're looking at some software technologies, as well as other related manufacturing technologies, including additive manufacturing or 3D printing. So that's it's a wide spectrum. It's quite a few different topical areas, and again, that's what makes the role so interesting to be able to explore all these areas.
Well, it's a big, diverse area, and it sounds like you're extending the reach, the reach from the core activity into some of these areas that are further downstream, but that probably offer a lot of value as well. How big is your team?
The team is fairly small. The direct team is about 4 people. And by the way, we are recruiting right now. We're about to bring in 2 more. So we'll get to about 6 or so. But we work with an extended team. So included in that, we don't include supporting aspects such as legal and finance. That's with the parent company. But the core team is fairly small. And I'll say one thing about the team itself. We've been privileged to be able to build a team that consists of former entrepreneurs and folks with deep technical backgrounds. And so I think from a value add perspective, having been an entrepreneur myself in the ag tech industry, as you alluded to in the opening, one of the things that I really appreciate about investors and future board members is if they've kind of walked through my shoes. Have they done this before? Do they understand what we as entrepreneurs are going through? And so when we bring on folks into the team, we definitely look for folks who have been steeped in the entrepreneurial world, either as a former investor or preferably also as a former entrepreneur. So that's what our team consists of.
Yeah. That that previous operational experience, especially for investors, is so valuable. It sounds obvious. We still don't see it quite enough, I think, in the UK and Europe. In the US, it's far more common. But the value it brings for young entrepreneurs is immense, I think. Your experience has included startups and other corporates as well.
Right.
Which is really interesting when you're trying to take a startup from lab to market, because you're going to be engaging obviously in startup activity, but you're going to be engaging with industrial partners and corporates along that journey. And so are you able to, that must give you some incredibly valuable perspectives when you're advising entrepreneurs along that journey.
Mm-hmm. Yes. I think that definitely for sure. I think for an entrepreneur trying to validate their idea, and in this case, a DeepTech related idea, I think there's a couple aspects that they need to go through. And one of the big challenges is getting validation from the market that what I'm working on is really what the market needs, let alone, let's set aside, can we actually achieve this technically? Because it's a deep tech problem. And so I think there's no better place to get that validation than to work with companies who are in the space. And that's, as you said, it's obvious, but I think it's also challenging. Having worked at companies like Applied Materials and AMD in the past, large companies like that, sometimes it's tricky to get the attention of the right people within a large company to divert their attention from what they're currently working on to talking to a very small company that may not have a product yet. And so I think there's definitely an art to, as an entrepreneur, to get the attention of a large company or a potential customer. It could be a small company, but an important potential customer. Get their attention and then walk them through a process of understanding what I offer. And also, more importantly, I think, getting feedback as to what the pain point is that the company is facing or your potential customer is facing. That whole process is critical for entrepreneurs. And so, yes, for sure. I think first, having gone through that myself and our team, as I mentioned, former entrepreneurs having gone through that themselves, hopefully we can bring some knowledge to the portfolio companies that we work with in that respect.
When you've seen it done well, or when you've heard about it being done well, what's been the hook that manages to capture the attention of the corporate, and who's leading this exercise?
Great questions. Well, when done well, there is kind of this resonance that happens. I think as an entrepreneur, we're trying out different messages, trying out different lines of attack, different ways to market ourselves, our company, our products. But when it really clicks, you can feel it. And so I'll give an example. We have a interesting water technology company that we have recently invested in the US, which helps companies like us and other companies deal with harsh wastewater treatment. And this is a new area for me. I didn't know much about it before studying this area. But one of the challenges that large companies have is, how do you handle toxic wastewater? And oftentimes it's something that is outsourced to a third party. And we've learned that in some cases, the wastewater is treated on site. In other cases, it's loaded into trucks by the third party and then trucked off-site for treatment at the third party's location. Whether it's the first or the second, it's a huge cost. And in particular, for the second route, which is that the wastewater is removed by the third party and trucked off-site, there's tremendous emissions that are created from the trucking process itself. And so the problem statement for that particular problem is not necessarily that we need to treat the wastewater. It's that in some cases, we need to reduce emissions. We need to reduce secondary emissions, not caused by our company, but maybe brought on by the suppliers that we use, in this case, the trucking company. So if that is the actual problem, then how do we get rid of that problem? And so what this technology from this water company is the ability to treat harsh wastewater on site with a new ceramic-based membrane that doesn't dissolve in harsh wastewater. And it enables companies like us to do on-site treatment, which then removes that need for trucking, and thereby removes the emissions problem, and additionally gives us a benefit in that we can show that in our sustainability objectives. And so the actual resonance there was discovering what the actual core problem was among companies like us and other industrial companies, and then being able to target that problem with this solution. Now, the solution itself is obviously very elegant. It uses an existing known ceramic material that's been around for decades. We find it in desiccants in food packages, so it's very safe and it's well known. But the approach is, how do you take that ceramic and make it into a usable membrane for this particular application? And that's where the innovation has come in.
Yeah.
And I think that's one thing. And then the other thing that this entrepreneur was able to do was tell the story very effectively to companies such as us in terms of, what problem am I actually helping you to solve? And really getting to the root issue. To the second point, yeah, sorry. I was just going to hit on the second part of your question, which was, who does this and who's responsible for it? I think I'm a strong believer that the entrepreneur themselves, the founder or the CEO, should be out there speaking with customers and being the first salesperson for the company before they bring in a dedicated salesperson at the right time. So in this particular example, the salesperson has been and still is the founder and CEO. And I think that's hugely important because you gather direct feedback from your customers, and then that can be integrated into the company's plans, and adjustments can be made. And then on the customer side, there is a customer discovery process as well. Is it the water management people, or is it the sustainability people that we need to be talking to? And sometimes it's both. And so in this particular example, this entrepreneur did a wonderful job describing what the problem was, and then finding the right stakeholders within our company to get this technology installed.
And do you know if that entrepreneur had a domain background? Sorry, had a domain relevant background? Did this person
in this particular
really
case
understand the water industry?
This person has commercialized the technology he worked on during his PhD and spun it out of that work to form this company. And I think he gained knowledge in the water industry just by diligent study of the industry, speaking with companies and talking to advisors, attending conferences, and just absorbing it by osmosis. Sorry for the pun, but essentially that's what he did. And so I think that's a prime example of how a lab-based technology has made it into the market and is making a transition from being a research project into being a commercial entity.
What are the mistakes that you observe now as an investor, being able to advise and work with a number of different companies? No doubt you see presentations from even more companies that you're evaluating. What are some of the things that you see again and again that aren't right, or that aren't as they should be, if the entrepreneurs or executives have a hope of raising?
Well, there's a few things, but so I think depending on the stage of company that comes in, I see different aspects. And I do have to preface this by saying there are diamonds in the rough. And so even if something doesn't look quite right, it could end up being a great company with a little bit of coaching and maybe some different personnel and things like that. But if I were to just take things at face value coming in, what I notice a lot in the world that we live in, the DeepTech world, is a very strong focus on the technology, a love of where this technology came from, what I did to make it work, which is wonderful. But as we were talking about earlier, it's only one part of the equation. The other part is, do customers really want this? Or is it solving a pain point? So I see graduate students, let's say, who want to start a company, talk about the technology and get a little too deep into it. I even see professional folks who maybe have not been a CEO before, but this is their first time. They spend too much time on the technology. So I think for an effective pitch, yes, the technology is important. Get to the punchline. What is this technology? Why is it differentiated? How do we know that it works? And then move on to other aspects of the company itself. Not the technology, but the company. Customers and team and financials and business plans, marketing, so on and so forth. So that's one thing that I see. Another thing is that pitches can be too long. And it's kind of related to the first point. If the time is not managed properly, these entrepreneurs are coming into a meeting expecting to give a 30 to 45-minute presentation, sticking to the script. And I think there may be a time and place for that, but certainly not in the initial pitch. I would recommend, and we recommend to our entrepreneurs that we work with, keep the pitch short. Keep it 15 minutes or so. Be ready for a 15-minute pitch. And again, this may be obvious. Folks may have heard this advice before, but I think it's critical because as an investor now, I find that I just wish I had more time. I wish I could take the time to really listen for 45 minutes. But unfortunately, we have a small team. We just don't have that time. And so I think there are some very effective ways to pitch an investor where, the entrepreneur is ready for a 15-minute pitch and they welcome getting interrupted with questions. I think those are the best kinds of pitches. So, in fact,
it's not going to be perfectly scripted. They're not going to be able to do it in the way that they've rehearsed again and again. They'll have their pitch, but
exactly.
If you're peppering them with questions, then you're going to see what they're like on the fly, what they really know. You can kind of, push around them, see, just how deep their knowledge goes.
There's that. Exactly. There's that ability to see them as a real person rather than somebody coming in with a
presenter.
Script. There's a presenter. It's also good feedback. From the entrepreneur's point of view, it's a way to gauge if this investor is engaged. If they're asking questions, they are engaged. Hopefully they're good questions. But any kind of question can, I think within 15 minutes is likely a good one. Now, that doesn't mean we purposely leave out information in order to elicit questions. I think for the entrepreneur, it's about covering each of the key points in enough depth. Key points being, what is the technology? Has it been proven? Do we have examples? What is my market? And so on and so forth. Touch on each of those to sufficient depth and allow the investor to come in with their specific questions that they're curious about. So I think it's a two-way street. For the investor, it's an efficient opportunity to learn about a company. For the entrepreneur, it's a great opportunity to see if this is a good fit as a potential investor in the future. Yeah. Are they interested? Are they knowledgeable? So that's what I would advise. And I see a lot of times that entrepreneurs will come in with a presentation and they insist on following the slide, sequence. And if a question comes in, they say, well, I'll get to that in a few slides. And then they go back to their rehearsed order of storytelling. I think that can be a missed opportunity. One of the things that I was coached to do as an entrepreneur and as an executive in a large company is when there's a question, answer it within the first 3 seconds. Give an answer. Literally, 3 seconds after the question, answer it. So the answer could be yes, no, or maybe, but let me tell you about this. So there has to be an answer. It can't be a long story with an answer at the end of it 1 minute later. So that's something that we also share with our entrepreneurs. Answer the question when it's asked. You can always go into more detail later, but answer it. So I think entrepreneurs who feel like they have to stick to their script lose an opportunity to engage that investor.
Yeah.
So that's another thing that I've noticed. So little things like that you learn along the way.
Absolutely.
That could be effective.
What's the filter for Lam Capital? Where do companies need to be in terms of their technology development? Do you have a particular look? We want to see technologies that are at least a TRL 5. We want to see this kind of team in place. We want to have an industrial partner already signed up or nearly signed up to sponsor the company's development. What does that filter look like for you guys? If there is one.
Right. There is I would say there's an implicit filter that we apply later in the process. I say implicit because we want to leave flexibility to find that diamond in the rough. I don't want to put a filter on too early. But as a CVC, we have flexibility to invest in 2 graduate students working on an idea, all the way up to the company has 100 plus people and they already have a product. So we have that flexibility. So that's also one of the reasons why we don't apply a filter, too tight of a filter up front. I would say, in general, we do have some filters, though. One is the domain itself. And as a very strategically oriented investor, we do look for companies in our domain or adjacent to our domain, as we were talking about earlier. So if a company comes in that is in agriculture, for example, because I mentioned that because I spent some time there, unfortunately, we are not going to be a great investor for them. That'll be a very quick filter for us. So I think that's one. As we get down the process and through the first meeting, maybe the second or third meeting, we start applying other filters to the company. And one of the things that we do like to do as we evaluate companies is see if Lam Research as a company can help the startup and vice versa. Are there technologies that the startup is working on that can help us in return? And so those kind of discussions take a little bit longer. We bring in engineers, we bring in business people from our teams, we bring in IP folks who look at the patents, for example. And that becomes a little bit more of a deeper process of discovering if there is a strategic partnership that can augment the relationship beyond just the financial aspect, the funding into the equity round. I would say some of the things that have given us pause are entrepreneurs who are difficult to work with. So folks who believe that, so strongly in their approach that there's only their way of doing it. Every company, and I think that ends up being a telltale sign of somebody who may not be very successful in business development. If you're coming in to an engagement with a prescribed way of doing things, it's very hard to work with multiple customers that may have very different needs. So if we see that inflexibility or the inability to think about creative solutions, I think that's a sign that things could be very difficult, not only for our relationship, but for the company itself, for their success in the future. So we start looking for soft signals like that. Mm-hmm. We also look for, so a positive signal, on the other hand, would be a company that is coming to us saying, that has proved that their technology, or not proved, but maybe shown that their technology has been important to others in our same industry. So, one of the tricks that entrepreneurs can think of is if there are 3 or 4 companies in a certain domain, work them in parallel, right? Get all of them talking in parallel, and then you can kind of get a little bit of a competitive dynamic working among competitors in your targeted sector, and that can help the entrepreneur out. So, as a as a investor sitting on the other side of the table, if I see that there's traction going on in our industry, that also will be a positive filter for us. We want to know more. We want to figure out how we can work with this company. So there's a few different things that
traction on the part of the company, or if there's
traction,
momentum in the area they're in.
Correct. Yeah. If there's momentum, if it essentially it tells us that this technology works. Other folks that we respect are interested and maybe even signing up to use this technology. It shows that it works, and it shows that it's relevant as well.
Yeah. Let me ask you a different kind of question, Kevin, if I may. In your experience as an entrepreneur, as a corporate executive, as an investor, are there any patterns you learned to pick out, or any observations you have about the way lab to market companies start, about their ideal starting point and their ideal starting team, that more people should know about, or like little belief systems or little patterns you pick up on that may indicate a greater likelihood of success in the future?
Well, if we're talking about lab to market, a technology coming out of a university or out of an institute, I think it begins with and this will sound very cliche, the founder or the founding team. And it relates to the topic earlier about being too focused on technology. I think successful entrepreneurs uniquely have an ability to understand the technology and the fact that it has to be commercialized. There has to be a receiver on the other end of that technology that wants it. So the water entrepreneur that I was talking about, there's another company that we invested in that has recently exited, which came out of Stanford University in the area of compact power supplies for industrial equipment. And there's other examples as well. These entrepreneurs were brilliant technologists, PhDs in some cases, but they also had a mind to commercialization, a mind to linking that with a receiver on the other end. So I would say, that's something that we look for. And that is a pretty, I don't know the statistics behind it, but it's been a good indicator for us of the potential future viability of these companies. Now,
do you know, if you don't mind me interjecting here real quick,
Sure.
you know if the inspiration for their technology development was driven by a problem they had identified in the market previously? Or did they start developing a general platform technology and then seek to back that technology into a particular application area later on?
Frankly, I think it can be both. I don't recall the exact origins of these two examples that I had brought up, but even if I look at my own history, I started a company coming out of MIT when I was working on an optical device for optical networking applications. In that case, we were not successful. I'll just start with that. But the origin of that technology was a government, or it was a customer-funded program. So that we had one large funding agency, a company that was funding that research that had a problem that they wanted to solve. And so I guess the origins of the technology that I had worked on came from an industry problem. And so there was that ability to translate that to real world. In the case of a platform company, I think it would require a platform technology, maybe that wasn't seeded by a corporate sponsor or wasn't seeded by an industrial need. If it's a platform-based technology, I think the founding team or the entrepreneur would need to select one or two key markets to address with that platform. And so for those types of companies, having that mindset early on, I think is critical.
Yeah. That mindset, just to go a little deeper into that mindset that says we've got to find, before we go too far down the path of developing this technology, we've got to find a home for it. We've got to find a problem that we can solve with this.
Absolutely.
How early do they need to have done that by?
I think they need to be thinking about that quite early. Now, if I say T's time zero is when the company gets founded, meaning before that, there could have been years of research. I think in the research phase, it's a different environment. It's academia, it's publishing papers, it's advancing science. But once you hit time zero, which is I'm going to start this company, at that point in time, I need to have an idea of what my top markets are going to be. And so, that's got to be the way, I think, to start a company. It's the problem that we often see is a solution looking for a problem, a hammer looking for nails, and that is challenging. So we need to advise entrepreneurs to make sure that there is a market need for this particular technology that I'm passionate about, and start focusing on who are the customers in that market, what are the exact pain points that they have, and how can I solve them? And if the technology that I'm working on happens to be the best solution, great. If it's not, then I need to go find another market for this technology that I've been working on. Or unfortunately, there may not be the timing might not be right for this particular technology to become a company. And so we have to be able to admit that as well.
How important is the team when you're investing? And that can sound like a very obvious question, frankly. But you're a strategic investor. You're also interested in the area where this innovation can potentially impact you. You may or may not require the team, or you may require the team for a little bit, but then ultimately you can get the value out of the technology later on. So I've heard some investors say, and they've admitted, the team is kind of important, but it may not be the most important thing, because we can replace the team at a certain point and get a better team if we need to. And in fact, we'll probably do so at some point along the journey. So the team is important, but it may not be the most important thing. Most would say, oh, yeah, obviously the team's important. It's what we're backing. Where do you sit on that?
Right. I can see both perspectives. I think the team is hugely important because we need that team to run the company and to make sure they can keep the company going until such time that we feel like we can use the technology, if that is the scenario at play. That our company would want to maybe buy this company or license some technology, but we don't go into an investment with that in mind. So, having been an entrepreneur, there are so many uncertainties to making a company successful. We need the team to be strong because they are the ones that are going to be running this company. We as investors are not going to be running the company, and we don't want to run the company. We don't have the domain knowledge that the entrepreneurs have. So I think the team needs to be able to, pay the bills at the end of the day. They need to be able to, everything they do has to end up lining up, in such a way that they can bring in revenue or raise money from investors or get grants from the government. They have to be able to bring in cash in order to keep the dream alive. So that the team is hugely important. Now, there is going to be an evolution in the team based on the stage of the company. And that is something that we will encounter as the company grows. Let's say, for example, a company gets to the stage where the founder may want to bring in a domain expert in a given vertical that they're addressing. Let's say it's the semiconductor vertical. And the person running the company initially is not a domain expert in the chip industry. They might want to bring in either a independent board director who is a veteran of the chip industry to advise and to open up connections. They may need to bring in a chief operating officer who will be able to scale up the company and run it in a way that a large, customer will feel that, okay, this is a credible company. We can back this. They may need to bring in a head of sales at that point in time who knows everybody in the chip industry that needs to be talked to. Whatever it might be, there will come a time when the team has to evolve, or the CEO themselves may find that they have brought the company from 0 to 1, and using that kind of analogy, and to go from 1 to 10, maybe it's a different CEO that needs to be in place, and the initial CEO will become the CTO. So there will be an evolution at some point. But when we do invest at the beginning, we look at the team. If this is the team that's going to be there for the next couple of years, we need that team to be amazing.
Is there a natural inflection point for you, or a common point at which teams change?
I've seen cases where the original team has gone through all the way through to acquisition, and that's many years down the road. And I've seen cases where the original founding technical team has changed roles within the first couple of years after funding. So I think that the trigger point would be market adoption and customer adoption. And so when that hockey stick, curve starts to go upwards, even before that, when we get signs that, oh boy, there's more and more customers wanting to do proof of concepts, or more and more customers that want to sign up for pilot programs, that might be a sign that, okay, we're going to enter a phase where we're going to start to commercialize this more and more. And then we have to look around the team to see, do we have the right commercialization folks here? Do we have the right people that can ramp and get ready for the orders that are going to be coming in next year? And so that might be a natural point to relook at the team. And it's more about, for me, it's more about putting the right pieces together for the company to be successful, rather than this person's not right for the job or that person's not right for the job. It's more about, how can we build the strongest case for this company to be successful? Yeah. And I think it takes a certain entrepreneur to be able to work together with their investors and board to understand that, hey, it might be the best for me as an entrepreneur to bring in more senior people who should know much more than I do, and who may actually take my job as CEO. We might have to do that in order to grow this company and to become successful. Yeah. And that's tough. That's tough.
It is. I mean, it's, and the irony is that the more successful you are, the more likely you probably need to change up the team, because you're going to be encountering a lot of new challenges. And if you are trying to ensure a certain degree of success, so it's a little bit perverse. Well, I've been successful, we've made progress. We've hit our milestones. We've gotten the validation. We're making progress along our commercial journey. And now we're going to encounter a whole new set of obstacles. And for that, we're going to need to draft in new skills.
Yeah.
And the chairs are going to have to change. So it is difficult.
It is. And having been in the entrepreneur's shoes, when I took the role as CEO of Crop Enhancement, the venture-funded ag tech company, I just felt a huge responsibility to the team in place at the time, because I was not the founder. I came in and took over the reins from the founder. Huge responsibility to the team, the employees, and the investors. And so my mindset was, I'm here to maximize the value of this company for everybody, including myself. I'm included in that picture. And so there came a time after about almost 5 years that I felt maybe it's time for somebody else to lead this company into the next phase. And that was the transition I went through to leave that post and then come and join Lam Capital.
Yeah.
But when I left Crop Enhancement, we had just raised Series B, so it wasn't like the company was healthy, was growing, and I felt that it was time for somebody else to lead it. And the subsequent CEO was an industry veteran, 30 years in the ag industry, with a commercial background, knew everybody knew all the customers, by on a first name basis, and he was the right person to lead the company through the next phase.
Yeah.
And so I've been through that. So I think it takes, I think having the mentality of I am here to maximize the value for everyone was the starting point. Is the starting point for being able to discuss, future personnel changes, including for myself.
I think that's compelling. Let's talk about boards. You sit on boards now as an investor, I'm sure, and your team sit on boards.
Yes.
And you've been an entrepreneur and a CEO before, and so you've had boards as well. There are a lot of entrepreneurs who feel their boards are not worth an awful lot. And and so I think certainly in the UK and in Europe, a lot of the feedback we get is that the boards don't provide the kind of value that entrepreneurs would like. Did you find that as an entrepreneur? Do you observe that as someone who participates on boards now?
I think in general, I've seen both situations, effective boards and dysfunctional ones, and I've been on both. And I agree that a board ideally should be a very productive environment, and it should be a value add. But unfortunately, in some cases, it's not. And in the cases where it's not, I can't generalize because every situation is different. But I believe that in many cases, it's perhaps one or two members of a multi-member board who may be who might not be adding value, or who might be disruptive, who might sidetrack conversations or do other things that are not productive. And so those are, situations that an entrepreneur has to deal with. It's part of their job. The CEO is held accountable by the board. And so just as any employee would want to develop a good relationship with their manager and be aligned with their manager in a normal setting, a CEO and management team should work hard to gain alignment and develop a relationship with each of their board members. So one of the things that I've seen, which is effective, which I also learned how to do as a CEO, is have individual meetings with board members between the board meetings. So if a board meeting is every 3 months, use that intervening time to set up one-on-one meetings with each board member and get to know them, get to know what they're interested in, what they're concerned about, and start developing that relationship, number one. Number two, use that opportunity to answer questions or mitigate concerns that board member may have and gain alignment, so that when there is a board meeting at the third month, a lot of those questions and issues can be, you'd go into those meetings with those questions resolved, and thereby have a much smoother board meeting. I think,
how many board meetings do you typically
the other thing
have a year? Oh, sorry. I didn't mean to interrupt you there. How many board meetings do you typically have a year?
I think pretty standard for us is about 4, so quarterly. There is one company that does it every 2 months, so that there'd be 6 board meetings. And then in cases where a company is maybe going through some issues, it could be a monthly board meeting until the issue is resolved. Let's say there's a cash crunch and it needs to be resolved, or there's some serious technical issue and it needs to be resolved. So in those cases, it could be as frequent as once a month. I've been in situations where there are weekly standing board meetings when things are very, very much in an emergency situation, and then that'll happen for some period of time. And then if the emergency is resolved, then we go back to a quarterly basis. So it all depends. All depends. But just to go back to the issue of how do we manage a board? I think the other helpful thing could be to bring 2 things. One, bring on, if there's an ability to do so, bring on an independent board director, ideally from the industry that the company is targeting. So if it's an agriculture company, maybe bring in an experienced former executive of an agriculture customer, and have that person be on the board. What I've seen in those cases, and that's what we did at Crop Enhancement, for example. We brought in a very experienced executive from the ag chemical industry. The independent board director can do a couple things. One, they can be a wonderful mentor to the CEO or the management team, opening up doors and advising based on their experience. And then number two, being offering the ability to bring along other board members who may not have that deep of a background in this particular domain, and helping them to see that what the company is actually doing is what they should be doing, and not to have to question everything that the management team is proposing. So bringing credibility, bringing credibility to what the management team is already doing, and bringing along other maybe non-domain experts on the board, bringing them along as well. So that's another way to manage a board.
In the UK and in Europe, the role of chair and CEO are mostly separate. And that role that you describe, almost an independent individual, a director on the board to make sure that the board is behaving and the board is up to speed. The chair may or may not have the domain expertise and relevant, but they probably will have startup experience. They will know the lab to market journey. It might be it probably is in a separate domain. Occasionally it's similar, but they'll be able to act as a good mentor for the CEO, and they'll be able to act as an umbrella as well for the stuff that can sometimes kick off at board, allowing the CEO to just focus on getting on with the role, while she or he takes responsibility for herding cats and making sure the board gets aligned. Is that a similar model, or do you see the chair and CEO often in the same position?
I do see chair and CEO being being two different people in cases where the board is quite large. I think that's where a board chair can really be valuable. And by board, I mean board directors as well as observers who may not have a vote in certain decisions, but are also a voice at the table. And as a strategic investor, we send observers to our portfolio companies. And so in some cases, there could be board meetings where there are maybe 3 executives, the CEO, CTO, and maybe the finance person, but there might be 10 or 11 board members / observers in the room. And it's very hard for the CEO to be able to manage excuse me, those folks, each coming with different concerns and ideas. And so that the pre-work of meeting ahead of time, that helps. But during the meeting, I think having a board chair is very useful in terms of the governance aspects, calling for votes, moving the agenda along, keeping track of time, and then keeping folks focused. So I think in that case, the board chair and the CEO must work very closely together as a team. The CEO must, trust what the chair is going to be doing during meetings, and behave as a team. And that's going to take coordination and relationship building and all that. But come in as a team. You deal with this stuff. I'll deal with that stuff, and make things very efficient.
Yeah. If Kevin, I've so enjoyed this. One final question for you, though. If you could wave a magic wand and fashion up core skills that leading entrepreneurs would possess more of, what skills would they be?
I would say communication, great, concise, targeted communication. B, relationship building skills, ability to relate to people of different backgrounds, relate to different investors, different constituencies, employees, customers, advisors, the industry. Number 3, a humility. I think a type of humility which is not, tell me what to do. I don't want to overstep my boundaries. Not that type of behavior, but I'm confident but I'm also open to feedback. I'm open to learning, and I'm willing to grow. That's what I mean by humility. I think those three would be a great set of characteristics for an entrepreneur. And so, two out of those three relate to people. I haven't said anything about technology. I haven't said anything about things related to the deep tech aspect of it. Because I think a CEO has to be more than a technologist. And to be successful in the lab to market journey is not just about making sure the technology works. It's about all the other things: raising money, hiring people, managing a board, bringing on advisors, working with difficult customers, getting purchase orders, firing people that may not be a great fit. All of those things are people related. And yes, it's based on the technology that I'm bringing, but ultimately, it's more than just the technology itself. So I would say those would be a couple of things that I would wish every entrepreneur could have.
Kevin Chen, thank you so much for joining me today.
Thank you so much, Chris. I've enjoyed this tremendously. Thanks for inviting me.
You've been listening to the Lab to Market Leadership Podcast, brought to you by DeepTech Leaders. This podcast has been produced by Bauhaus. You can find out more about us on LinkedIn, Spotify, Apple, or wherever you get your podcasts.